Time now for Options Insight. I'm Abigail Doolittle. Joining me today from the CBOE in Chicago is Alan Nuckman. And Alan, what a couple of weeks we've had. Last week, the worst week since August. Right now, the S&P 500 headed to its best week since June. There do seem to be some that are skeptical in terms of these new all-time highs, given we don't know the true impact of the coronavirus on the global economy. What are you seeing, though, technically and otherwise? Are you a buyer right here at these highs, or would you let it cool off a little?
Well, I've been bullish and a buyer. Now, we use that opportunity, and a lot of people use that to buy at a discount, obviously, when things are sold off, and that brought the market right back. We saw some bargains, and now we're back at the top skin. And importantly, what we did was we voided that technical top. We had a key reversal top where we made new highs and lower weekly closes, so that's now voided again, and the market's moving to the upside very strongly, looking for that 3,500 in the S&P that we talked about many weeks ago. That still looks like our near-term target on this momentum march. Yeah,
the voiding of that possible weekly top, that does seem pretty important because when that had been in place, it looked pretty bearish. Speaking of bearish, oil, since the fears around coronavirus and the impact have come to light, oil down more than 10%. Your trade is on ExxonMobil, and you're bullish there, too. Talk to us about why.
Right, you've got two choices. You can go after momentum stocks that have already moved, or you can look at stocks and sectors that have suffered. So looking at the oil market, it's part of the macro market when you look at stocks and interest rates, which have already stabilized. Oil market's kind of disconnected. For me, it's a sign, it's a barometer of global growth, and right now you see a delayed reaction. It is holding above 50 when you look at crude oil. So my play is in Exxon. Exxon's really bad here. It's gone down 15%, whereas the Dow has gone up 15% in the last 52 weeks. So looking at the Exxon option play, it's a very long-term stock substitution, chip down strategy. So what I'm looking to do is by the January of 2021, that's about 10 months a time, 10 and a half months a time, buying the in-the-money call, the 55 call. Now, let's remember, Exxon has not been below 55 since 2005. So this is really a risk-reward play, looking for this to snap back. And that option right now is trading for about $8, and it's $7 in the money. So the break-even on this is $1 higher, the expiration break-even $1 higher, with plenty of time for good things to happen. Well,
Alan, you have been simply great over the last couple of years as a bull, picking your points, and here's one on ExxonMobil and the markets as well. Thank you for joining us for Options Insight. Alan Nuckman of Agora Financial, and from New York, this is Bloomberg.